Okay, so in case you haven't heard the news already, the Federal Reserve cut interest rates this week by 50 basis points. So now what? What does this mean to you as a consumer? Well, basically it means a couple things. Number one, if you have a home equity line of credit, a lot of your credit card debt, if you're a business owner and you have a business line of credit, a lot of those types of debts are tied to prime. Prime was at 8.5% prior to yesterday, and now that the Federal Reserve has moved the Fed funds by 50 basis points, that now went from 8.5 down to 8. So any of those loans that I discussed are immediately impacted by that half percentage point. But you're probably saying, okay, well, you're a mortgage guy. What about mortgages? Here's the thing. Mortgage rates have actually already improved over the last month or so, about a half a percentage point in terms of rate. So we've already seen the benefit of what the Federal Reserve is going to do. I mentioned this in a previous video that the market is always ahead of what the Fed is actually doing. However, one of the things they did say was that they're anticipating additional cuts this year and then even more cuts next year. So long term, we're going to see mortgage rates improve over the next 6 to 12 months based on what the Federal Reserve is projecting as far as what they're going to do in terms of future cuts. So that actually was the better news that came out of yesterday's announcement. It wasn't so much what they did yesterday, but what they're going to do in the future that's going to help impact mortgage rates, make it a little bit more affordable for some folks. Here's the unfortunate thing. As those rates come down, however, we're also going to see demand increase. And I've mentioned this several times as well. Our inventory is at kind of historical lows. And so we really need to get more houses on the market in order to benefit folks. Otherwise, what's going to happen is rates are going to come down, but home prices are going to continue to climb. And so any benefit you might get from a lower rate is going to somewhat get wiped out by the fact that prices are higher. Anyway, all in all, this was good news with the Fed doing that. Mortgage rates, we're going to see slow improvement over the next 6 to 12 months. Again, as I've stated in previous videos as well, they never come down in a straight line. It's always kind of down a little bit, flat, up some, etc. So that's what we have to look forward to over the next year or so. Listen, I hope you found this information helpful. If there's anything we can do for you, please just call us, text us, email us. We're always here to help, always here to answer any questions you may have. You have a great day. We'll talk to you soon. Bye-bye.